Good evening, guys. Ken at Tortoise Capital. This is the Foundation's Q&A check-in for January 25th, 2024. We had a recording error on, let's see, Wednesday night. Was it Wednesday night? Yeah, that's just last night on the book club, and it didn't finish recording. So I'm going to redo that recording since I didn't get any questions from this week. So we're just going to drive on through it. So in the book club, we are here on week 3, looking at pages 95 to 129. We're covering 4 different sections of the book, looking at some mental models, considering system, self, and market as the top level psychological lens. We're going to look at a number of edges and concepts and talk about the tortoise mindset that guides all of our trading. In previous weeks, what we've done is in session 1, introduced the authors, how we take notes, and then a review of the organization of the book and a summary of our community of practice. Last week, we talked about top-level trading challenges and powerful reference books and some inspirations from successful traders that lays out all of the challenges, opportunities, methods, and references that have informed our process. So if this was very divergent thinking and expansive, then we are starting to narrow in on what are specifically our methods. In the next 2 weeks, sessions 4 and 5, we're going to take a look at 2 very particular systems, the sniper trading system and the Kata 2 system, and the way we train that with the Kata 2 challenge. And that's going to be coming from the work that Griff Cooper did. And in addition, we're going to summarize the 2R battle drill, which is a concept and an edge and a mindset about how to trade any particular system. That when you come up into 2R and you're expecting some resistance, how do you manage routinely to make the best decisions in what you consider to be the favorable trade result? Then in session 11, Phil Wu is going to walk us through a number of platform innovations and indicators and dashboards they put together in Thinkorswim, which duplicates the work we've done in TC 2000 and TradeStation. Then in section 12 of the book, it's going to take us 3 weeks to cover all that material. There's about 60 pages just filled with a number of different strategies, techniques, tips, indicators, best practices, processes. And these are the raw materials, components that go into making strategies and systems and whatnot. It's the building blocks of our tool room. In session 10, we're going to be taking a look at 10 different featured traders, each of whom applies our methods in a uniquely adapted way for their own purposes. And we want to show just how many different ways there are to apply the material that we provide. And then in session 11 is an opportunity to discuss possible ways forward for your own personal steps going forward. And I'll be asking you guys to make like a half a paragraph or a half a page summary of what you think your next steps might be. So I can suggest if that is the best use of our material or consistent with what we've provided. And in step 12, we'll talk about maybe some additional Q&As or additional ideas for strategy going forward. And then that'll bring this book club review to a conclusion. So that's what the path ahead looks like. I had received some feedback from somebody who said, hey, I read the first 90 pages of your book before I got to anything that I could immediately apply. And I said, well, yes, then you're reading it correctly, because this is the opposite of a quick fix. You can have things quick, good, and inexpensive. Those are the three criteria. And you can pick two of them. So if you want it inexpensive, like a $9 book, and you want it really good, then you might have to expect spending some time to go through and unearthing the nuggets and figuring out how they can apply to you and in what proportion. Um, so we're not using a get rich quick approach in this book. We're really trying to establish the broad foundations of our material as it supports the many different types of trading that we do. Which leads us into an example today from this is Tesla on 3-minute charts. This is a sniper trade of the day for 25th of January, 24. So this was a big gap down, like minus 10% at the open. So by definition, it's in play. Tesla is always in play for us because it's one of our frog champions, and it was in a critical state prior to the big gap. And it was a big gapper. And so 3 out of our 4 criteria were hit for wanting to trade it. And we noticed that there was an opportunity trade that occurred here right around lunchtime. It had sold off initially 10%, then an additional 2%. So it's down 12% at this point. It's well underneath the VWAP. It is stabilized into a sideways quiet channel. The PSAR has adjusted and adapted and brought it into narrow waters here. The 30-period simple moving average, which is the Bollinger Band mean, has joined the PSAR, the 30-period regression line, the 10-period regression line, and the dragon in a tight roadblock of a train wreck, which creates a Z3 pinch pattern, which is one of our sniper patterns. And that allows us to frame a trade in a standard way using the channel as the breakout, and we're ready to go long here or short here. And when it broke the PSAR, we end up getting short, and we use the risk box of the width of the channel as our stop, and we are prepared to trade it short. And we know that if it breaks below the belly of the RL10 here, which is about a 2-hour battle drill, then we need to certainly be ready to preserve the gains and possibly consider a second position. If this were to fail immediately, then we'd be ready to go long, because that's what you do in the Z3 pinch. That's a Z. And we know that if it gets above the VWAP, then it has a really good chance to start moving at least halfway up the stack to start closing that gap. So what we have is a compound critical state, which is one of the concepts that we use that gives us an opportunity to trade targets that are in a position to have larger than normal moves in either direction in shorter periods of time reliably. And that's what this represents. So this is a piece of standard work for us. And when the entry is taken, shortly thereafter, it begins to collapse right on schedule. It actually runs down past the belly of the RL10. So this was a place where a second position could have been taken. When we see the 2 horns of the dragon and then failure to fail further, instead starting to recover, we get an alert to exit here, and our fill was right on the PSAR. And so what we end up getting for our routine trade from a compound critical state is, for the 1 unit of risk, we get 1, 2, 3 units of reward. So we get a plus 3R win in about 1 hour. meaning that if you had risked $400, then you netted $1,200 after commissions. Lather, rinse, and repeat. That's the sniper trade of the day. The sniper system and mentality is what we're going to be covering next week. So I wanted to give you a little front run of that. But that's one of the trades that I will review tonight in our nightly strategy and coaching podcast. Now on to the sections of the book. So this is for session 3 for the 24th of January, pages 95 through 129. That's sections 5 through 8 in the book. One of the central ideas that is in this part of the book is this notion of how we do our top-down conceptual trading. So we have primarily a swing trader's mentality, and we cover that in this section, pages 101 to 104, my detailed approach to swing trading. And the reason I do that is because you can get some considerably abnormally large moves on swings when you get price anomalies in the short term that then get corrected. So you could have something like Tesla, which had this great big nice run up, has lately sold off, and now today has a big gap down and it ends up with a 12% sell off that is stabilized at this new price. Is that the new correct price? Or are people entitled to believe that the move to here is an overreaction and now I can buy Tesla on sale and maybe it'll go up? Or this was really the first day of what's going to be 2 weeks of persistent selling as we try to discover Tesla's new correct price somewhere down around $120. Well, exactly nobody knows what's going to happen. And we do know that it's going to happen fast because it's Tesla and it's volatile. And the market is so saturated with abnormal gains that this is a logical time of year and place to experience profit taking. So that makes this a compound critical state. Now, if Tesla ends up going up for the next 2 to 10 days, then that's going to be a perfect swing trade. And as long as it's going up on a swing trade and it's moving up intraday better than the market, I can now use that as information to also day trade it with a turbo position, which I exit before the close, and then let the swing trade continue to carry me north until such time as price fails and I hit my exit, and then the swing trade is over, and then my day trade is over. So this is a technique we call hybrid trading, which combines 2 or more of our primary time frames: core, which is 2 weeks or longer; swing trading, 2 to 10 days; or intraday trading. Each one of those can be traded separately, but when you start integrating them using the fractal patterns that we teach in the foundations course, such as the 2R battle drill, the Z3 pinch pattern, the supported spring crossing, the R10 minimum manageable risk box, more on that next week. Well, these are concepts that we teach in foundations that apply across the board to all of our trading timeframes. And then when you start blending those together, also using techniques taught in the foundations, you end up getting a hybrid approach to trading with a meta portfolio, and you can use the information and resources of different time frames to support your operations in the other time frames and get a risk adjusted return. How we do that is discussed during this portion of the book, 101 through 107, when we talk about the approach to swing trading. It's covered also in the systems section in our self systems and markets model, because as you recall, we believe that there's knowledge about self, knowledge about systems, and then knowledge about the market itself that have to be mastered. And your success as a trader, in our view, consists of your ability to harmonize and synchronize and align your knowledge in each of those three areas so that they can work together. So ideally, we have a deep understanding of our psychology, which Dr. Tharp taught us is about 90% of the results that you get comes from your psychology. And then our understanding of a system that is aligned with who we are and how we think, and it leverages our strengths and protects us against our weaknesses. If you do that, then your self and your systems are aligned. But you also have to trade those systems in markets that are appropriate for that kind of system to discover its edge. And having a good system and being able to wait for the market to come around to your edge is also an important element of this. So we've got to align ourselves with the kind of market that we want to trade. And then when you can bring all three of those together, you have the best of all three worlds, and the whole is greater than the sum of the parts. This is largely a psychological effort, which is why Van would teach us that the self and psychology was the most important element of this. It turns out that the market and systems knowledge can really be rendered into a math problem. And if you can master that, you actually have a long-term persistent edge as well, because most people can't do math correctly and or they're afraid of it for that reason. So these sections here, system, self, and market, describe the materials that we have in the book in these pages 95 through 129. One of the most important elements of that psychology is the respect that we have for Master Shi and his TED talk on 5 hindrances to self-mastery, which he did at a TED Vitosha uh, uh, video conference. And one of the things we like to do is listen to that 18-minute speech while walking at night, relaxing and breathing and exercising, and then coming back and taking the notes on it and reflecting on the experience of listening to him and asking ourselves, why did it resonate? What parts? What does it make me want to do? What's the first step that I could take? What would be the outcomes of that, and starting to visualize? And then what would taking that step help me decide? And so this process of having an activity or an action and then a reflection on that action recorded in your learning journal, and then using that reaction to trigger the next action gives us a virtuous cycle of action learning in which we cycle back and forth between effort in the world and effort inside our mind, body, and spirit. So that's an important element of the psychology approach that we adopt in looking for self-mastery. Under the systems section, we really are taking a look at how the floor and the swing and the day can be understood individually as time frames for trading, but then also how they might be linked in a form of hybrid trading. And that's, I'm not going to beat that dead horse any further. And then under the markets, we talk about what is really separate and distinct about long-term trading, which we use monthly rebalancing based on momentum and affirmative relative strength, how that is similar to, but also can be different from swing trading, where we're looking at patterns that last 2 to 10 days, where we're looking for price anomalies, and then looking for price to discover the new consensus fair value, and then how we can use patterns, statistics, and trade location to help us identify those compound critical states that give us the opportunity to trade the most vigorous and volatile targets, and that we're prepared to do that when the volatility hits, as opposed to being surprised by volatility. That's an edge. And then finally, we talk about how intraday trading is different than those two in the sense that it is tactical, based purely on statistics that looks at trade location, critical states, price action confirmation, and then a realistic assessment of the reward and risk that's available for intraday trading in the norm. This is the one that requires the most impulse control and self-discipline. So again, this is one where when you're trading more, then the psychology is an even larger component of your success. Now, under the keywords and models, we spend time around page 107 to introduce the idea of the top level process. If self, system, and market is the top level mental model, then the plan, prepare, execute, assess model is our top level recipe that allows us to go from this strategic view of trading into an operational or an action oriented process that takes us systematically and with discipline through the four stages of being ready to trade, trading, and then assessing each individual trade and our conduct of all of the three other processes in order to make the processes good and available for continuous improvement. That's a key element of our process, and that features the adapted daily after action review, which we borrow uh, humbly from the Army, which has made the U.S. Army the best in history. And that's discussed on pages 110 through 111 and how it is incorporated into our continuous assessment. And then we talk and give respect on page 129 to the work of Master Shi with his RAIN model, in which the RAIN method or process is used to overcome the five hindrances that prevent us from achieving self-mastery, wisdom, and enlightenment at the top of the mountain. And that model says that when you encounter difficulties, that you just let it rain, that you recognize the hindrance and the tension and the friction, that you accept it just as it is and you acknowledge it. And then you use your curiosity to investigate the circumstances, reasons, causes, and possibilities. And then finally, you non identify yourself with that shortcoming so that you can separate yourself from that zone of tension, the hindrance that's blocking you. You can simply step to the side and not identify and simply observe and then find a way around it and continue on up the mountain. So it's a particularly compelling presentation that he makes, and it's one that we suggest that you do every day for 30 days the first time you encounter it in order to start building out that skill. The plan, prepare, execute, assess model, we go into great detail on it. Of those four processes, the most important one is preparation because of the following reasons. We say all you really have to do in planning is to identify tradable targets that have evidence to support the hypothesis that they're in a critical state. And so we're going to generate a list of four things that we're going to be ready to trade. First, any open trade from today is going to carry over to tomorrow and it's going to go on that list because we're already committed to it. And we've done some work today to identify critical states and update our trade frame. So it's a simple matter to be ready to continue that trade tomorrow as a continuation trade. And then we're going to take a look at any new signals that come out of our primary lens, which is the swing. And we have two different methods of trading swing trades. One of them features purely mechanical systems, which are six documented, coded, robotically tradable systems that are 100% rules based. So you could be a rules based trader where you have no discretion and you simply follow the rules, or you could be a discretionary trader in which you are using primarily your trader's judgment to make decisions on what to trade and how to trade it and when to get in and out and so forth. And you might also try to blend those in some balancing act, maybe putting more weight on one or the other. And so we have 6 mechanical systems that we teach, along with 6 adaptive strategies that require a little bit of judgment, and they have more relaxed criteria, but therefore more flexibility. But one of the ways that you get on our daily trading list is that it fires for all the criteria of one of the mechanical systems. Or if you are a discretionary trader, if it lines up according to your estimate of the situation. And so any new patterns allow you to get added to the prep list. Any of the standard reliable trading symbols like EWW Mexico, EWZ Brazil, Tesla, Alcoa, etc. We have about a dozen symbols that are reliably large volatility and very directional on both daily and swing trading basis. And those are things that we are always ready to trade tomorrow because they are so reliable in showing up to be ready to trade. And we prepare each of those symbols using our standard framing techniques, which we talk about in pages 113 to 114. And when we do that, we are answering these standard questions about what price could do based on our framework and indicators. And then we also say, what happens if this trade actually works? How do we decide where to take a profit, preserve gains? What's the follow-on move likely to look like? Should we stop and reverse? When should we get back in if it starts going back in the same direction that it was going in before we got out? And so taken together, those two sets of questions are what we call standard trade framing. And then the last thing that we do is that we're prepared on any day to examine all of the symbols from those 3 different categories. And then we want to find the ones that are the biggest gappers, either up or down, because those are going to be the ones that are the most reliably large for the day. We want to trade things that have the biggest move on the next day. And so the ones that have the largest absolute value of the gap as a percentage of their price typically are the ones that have the biggest follow through moves. So if there's anything on our prepared list that is also a big gapper, we're ready to trade it. But even if something is not on our watch list, but it's on our larger population of tradables, like which we have about 60 symbols, and we try to pick about 10 to 15 to make it onto our prep list. If one of these other non-prepared ones gaps, we also have some battle drills that allow us to trade that at lower risk, should that be the case. So, regardless of how something gets on our tradable list, once it's on that list and we have prepared it and rehearsed it, then we are ready for simple battle drill execution, which is simply implementing a rehearsed, prepared plan. And we spend most of our time and effort working on managing our stops and determining the exit because the entry is the least important part of any of those systems. And then finally, we conduct assessment so that we can routinely and rigorously evaluate each trade and each of our processes so that we can continue to be better. Now, we like to say that the secret sauce is not secret, it's only rare. And the secret sauce is that we are willing to do the work. And the work is according to these standards, and the discipline is to do them every day with accountability. And that's not a secret, but it is rare for people to be willing to do it, which is why most people don't succeed in trading, survey says. So, in conclusion, then, what we do in this section of the book is begin to translate our top level strategic view of the markets and of the way we generally approach trading and bring it into these operational models and processes like plan, prepare, execute, assess, using critical states, managing our psychology, and then assessing with the standard daily AAR. We've prepared trades in a standard way so that execution is simple and a battle drill. And we focus primarily on swing trading as the centerpiece from which our day trading, core trading, and hybrid trading go. And all of them rest on a foundation built on battle drill, professional behavior, statistics and math, and daily practice. So that's everything I want to cover for the book review today. We'll get that part published and posted and added to the book review workshop. I want to shift gears while we have a little bit of time left and take a look at a standard practice that we've evolved as just one way to manage risk in the markets. So this is something we call the 4 bullets method of intraday money management. Now, 4 bullets resonates very strongly with me, which is why it's an important icon or an artifact in my trading psychology. When I was a kid, we were poor, and my dad would give me a 22 rifle and 4 bullets and say, go out and bring home some rabbits. And if I brought home 1 rabbit, we could eat today. And if I brought home 2 rabbits, we could eat today and tomorrow, and I could sell 2 skins for money to buy more ammunition to hunt more rabbits. But if I wasted those 4 shots, or I couldn't find any rabbits because I didn't know where to look, then I would bring home no rabbits and we might not have anything to eat. So the idea of each bullet being precious was important to me, and to be judicious about taking the best shot with those 4 bullets. And later, when I became a soldier and a combat infantryman, and the only thing that I had with me in combat was what I could carry in on my back, ammunition was a precious commodity because it would keep us alive and allow us to accomplish the mission. And so I learned to treat ammunition with great respect. So when I equate the dollars that I have available for trading, and I use the mental model of ammo and 4 bullets, it resonates very strongly with my emotional center, and it makes it easy for me to follow the discipline that are connected to the habits of a lifetime. And this is part of the knowledge of self that we explore in the foundations course, to find those powerful icons and artifacts and stories that resonate with us, that allow us to trade with an edge in the market. So this is what I mean by the 4 bullets. Each bullet represents a standard unit of risk, and it started off with $1 per risk, and then $10, $25, and then 50, 100, until my current level of trading. And what that meant was that I had a standard unit of risk per trade, and I could turn that into dollars of risk per share based on whatever pattern I had framed. So if I had 5 days down pattern, and this was going to be my standard risk, and I was ready to go long or short, and that this would represent, let's call it $1 of risk per share, then I could take that $50 of risk capital, divide it by the dollars of risk per share, and that would lead me to be able to trade 50 shares. And so this is a case where the precise trade frame, which gave us a reasonable minimum of 2-to-1 to a reasonable profit target, is a justified reason for taking the shot. Because if I hit it and I'm a good marksman, I have a good chance of picking up 2R, which justifies taking a 1R unit of risk. But if I spend all of that risk capital each day, then I'm out of bullets for that day. And if I can't make money with those 4, then maybe I should just stop trading for today. And that 4 bullets of risk represents from the bank of our portfolio, the strong box, that represents some percentage, a small percentage of our overall portfolio value, so that each daily trade is not putting the bank at risk, but is providing an opportunity to go out into the world, seize opportunities, bring money back, and put it in the bank. Well, this can be a very psychologically challenging environment because of the emotional content of the marketplace. So, how do we in practice do that? This is simply a metaphor and a analogy, a model, if you will, that works for me. So I start the day with 4 bullets in what I think of as the risk bucket. And the risk bucket starts the day at 4. And this is a bucket that can hold a maximum of 8. So I start the day with 4 bullets in the bucket, and then it could handle an additional 4. If I earn money on trades out in the world, I can take the money that I've earned and return it to the risk bucket to replenish the ammo. And then any gains, I'm going to be able eventually to bring it back into the bucket so that I have more money to trade. So the better I trade during the day, the more money that I've earned to trade that day, because perhaps I'm in good alignment. But in order not to run away with my own greedy psychology, I first have to do 2 things. I have to feed the bulldog, and I have to pay it forward for tomorrow. And here's how I do that. So the risk bucket is what I am using to fund current trades. The only money that I can use to trade comes out of the risk bucket. Then I have a gain bucket in which I start at 0, and it can hold a maximum of 6. Now, the last one that I have is a resupply bucket, which acts as an overflow of the gain bucket. And it starts at 0, and it can hold a maximum of 4. So what'll happen is I go out into the world and I perform a trade. Now, if I lose on that trade, this is what happens. First, if I lose 1R completely, I've lost the entire bullet, and now I no longer have 4 bullets. I've lost that bullet. If I lose less than 1R, meaning that I went out and risked $50 and I lost 25, so I'm down $25, I can take the $25 remaining and I can bring that back into the risk bucket, and it refills from the money I was able to recoup from the losing trade. And then I can reconstitute bullets or half bullets from whatever is inside the risk bucket. So in that risk bucket, which can hold a maximum of 4, I form new bullets in order to go out and make trades. And if I lose money, then this starts going down. But if I only lose a partial, then some money can come back in until I am out of money for trading that day. But what if I win? If I have a winning trade, what that means is I've recovered the money that I used for my bullet, and I've earned some amount of gain. So if I risked $100 as my bullet, and then when I sell, I net a total of $150, then I get my $100 back that I used for the initial risk, and I made 150. That the gains go into the gain bucket and start filling. Let's say I made 200 because it'll add up. Uh, if I made 200 and my bullet was 100, then I have filled up my gain bucket to 2, to 2R. When I have 2R, when I've net 2R, I acknowledge psychologically that I have fed the bulldog for today, and that the bulldog at least got 2R to feed. Whether or not I made any more money or I lost all this or I gained more, the first 2R of net gains feeds the bulldog. And psychologically, that's an important moment for me. He's not going to chew my leg off. As soon as I get to that level, I now am going to start paying forward up to the next 4R of wins. I'm going to pay those forward with gains, and I can put those into this gain bucket. Now, when I have fully filled the gain bucket, I'm good to go. I can put a lid on that because I've met all of my obligations, earn money for others. I fed the bulldog and I paid forward 4R that I can use tomorrow to pay for tomorrow's bullets. So now I feel I've achieved two very important psychological states. Now, when I have any gains from a trade, it comes over to the gain bucket, but because the lid is closed and it's already done, it goes over into the resupply bucket. And then from the resupply bucket, which can hold up to 4, I can use that to top off the risk bucket up to a level of 8. Now, if I was perfect for that day and I never lost money on the trades, the first 6R of gains above and beyond that go into the gain bucket, right? The first 6R, and I haven't lost any money on the trades. That means I still have all 4 bullets fully available. Plus, I earned 6R, and that means any future earnings can go in and start filling up the resupply up to a level of 4. So I could actually expand to 8 bullets, and it all operates the same way, that I can only use money in this bucket to fund the trades going forward. Now, when all of that money disappears, or if it disappears and I've lost it all, then I don't have any more money to spend that day and my trading is over. So I use the psychological tools of the gain bucket to feed the bulldog and pay it forward for tomorrow. And then and only then can I take the next set of gains in order to increase the amount of capital available for today's trading. And what that allows me to do is to get large on days when I'm really well aligned with system, self, and market. And on those days, it's not impossible for me to earn 20 or 30R in a day, but only after I've set aside the first 6 to feed the bulldog and pay back the bank for tomorrow. Then I can use up to 8 bullets to increase my position size or start working with my span of control. But it requires considerable good performance before I can start doing that. Now, what can happen is that with those first 4 bullets that I have, and I have mixed success, there can be some where I have gains in which that money goes into the gain bucket to fill up that first 6. And then if it overflows into the resupply bucket, but until I get that resupply bucket filled, I can't reconstitute that set of bullets. So it behooves me to be judicious with my shots to earn 6 so that I can resupply and then increase my position sizing all the way up to 8. So if my ammunition had been lost down to only 2 bullets left, and then I had 4 in my resupply bucket, I could put those in, and then I could have 6, and then my resupply bucket is empty, and then more gains could go in here until I get 2 more, and then I can put it up uh, into the ammunition box. Then if my gain bucket is full and I'm at 8 bullets inside here, any excess gains just go straight to the bank and I leave them alone. So what this system does is allow me to reliably manage my emotions through a mathematical process of accounting, like managing your chip stack if you're a poker player, or managing your limited ammunition if you're a young child hunting for family food, or if you're a combat infantryman. And it allows me to maintain my stability and discipline regardless of the kind of day that I'm having, because I know that there is a standard way in which I'm going to approach the process of managing my money today. Now we have about 6 minutes left before the hour is up, and I wanted to just cover a preview of our advanced course and future books. So one of the things that we do is that we document in our hybrid trading job book a number of different skills and techniques and mental models and processes and so forth that allow us to trade the way that we trade. So we've broken these down into a job book, which is a technique that we use to manage trading in the Army and in the professions. And so there's a number of hybrid trading patterns that we use, hybrid frogs, owls, couple forms of the dragon, sideways quiet channel, Z3 pinch, super pinch, and then chain trading that pulls those together. We have a number of sense-making lenses that allow us to interpret price action in a certain way. And when we combine them, it fits into what we call the multi-time frame, multi-lens analysis. And we use different models like the MACD 4 seasons, the regression line crossover Bollinger Band framework, the regression line fractal framework, the pinch and stretch, support and resistance. We use statistically based building blocks and a number of different stats-based indicators to build out the trade. So this is page 1 of our job book. So let's imagine that you wanted to become proficient in those. What we would require you to do is to define what you understand that to mean in your notes section, where you would summarize what each of those things are. And then we have an 8 level ladder of confidence in mastery, in which at level 0, you're not even aware that it exists. At level 7, you fully understand it, you use it every day, and you are successful at teaching others how to use it in their trading practice. And that represents the highest level of skill. So in level 1, if you could simply summarize it correctly, we'd give you credit for that. And then if you could apply it in an example, and then if you could incorporate it routinely into your practice, and then if you could narrate it in public to others, etc., you start moving up the skill and confidence and mastery level, and that would represent uh, your skill level on that particular one. So you can imagine if you start doing this job book, you would pretty soon have a score sheet that would help you keep track of where you are. And then all of the things that are not yet built out, you could figure out if that's something that you want to work on to increase your mastery. And then you could prioritize from this list. Well, if that's page 1 of our process, then we also include um, information on psychological states, how to manage your own trading psychology, how to use storytelling and artifacts and mental models and archetypes to manage your trades through the life cycle. We can talk about your ability to use relaxed strategies. These are some of our more advanced techniques. They're not strictly rules based, but they do allow for some of that trader's judgment. And then we have operational recipes like the plan, prepare, execute, assess model, decide, detect, decide, deliver, assess, the sustain, improve action model for our after actions. We talk about these power animals, the owl, tortoise, dragon, crocodile. Each of these shamanic power animals represent psychological states and qualities and habits of mind that if we can learn to internalize the teachings of those animals, then we can leverage that in times of stress to perform at a higher degree of uh, skill. And then in this section, we talk about um, sorry, we talk about specific techniques, indicators, and systems like describe what we mean by the regression line fractal framework condition. Well, that's actually comparing the moving regression line 10, 30, 90, and 270, and considering how those four regression lines are arranged in space with their slope. We can take a slice of that represents today and determine a market condition and find some opportunities based on our interpretation of how those four moving regression lines are currently arrayed. That's one of the mental models that we use in our multi-lens analysis. Uh, the daily squeeze represents a strategy for finding some symbols that have normal price actions of a certain range, but have moved into a particularly tight doji arrangement, which supports the idea of a coiled spring and potential breakout. And so we compare all 60 symbols on the daily squeeze table, find the ones that are most in a condition of squeeze so that we can prioritize them in case they surprise the market with a big move out of that quiet, compressed condition. But we're not surprised because we were prepared to make that trade. And then finally, we talk about some of the trading processes that are common to all of our trading systems, such as defining ourself in terms of our values and identity, our mission and purpose, and our alignment and balance. And if you're fully integrated with that and you can help others discover their own, then you'd be all the way out at a 7. But it turns out that there's a reason why that's at the top of uh, this fractal list, because it's central to everything we do. And then all of these items down here, like the being able to identify the habits of mind that are your own particular sources of strength, having identified and implemented and leveraged your sources of courage in life, that's a very personal source of inspiration and energy for you. And we do psychological exercises to help ourselves find that courage to be able to act in the same way that gratitude and forgiveness are an important element of the things we do. So, taken together, this hybrid trading job book defines the top level skills about system strategies, techniques, and tips, system self and market, the recipes for success that we use to trade in our particular way. And this hybrid trading job book is going to get published when I finish it. Is probably book number 3. It's very close to being ready, and it is going to be part of our foundations course, and it's something that you can use for life to carry your trading skills forward. It's also something we're adding to the small group coaching program, which kicked off this year with our initial cohort. And if we were ever to do individual coaching one-on-one, then this would be the basis for that self-assessment that drives all of our engagements together. So that's a preview of coming attractions um, in um, in the months ahead. Book number 2, I finished outlining yesterday. It's going to be taking a look at the 4 phases: plan, prepare, execute, and assess. And it's going to consider how to use storytelling and story thinking as a body of foundational knowledge, and systems thinking, its own recognized body of knowledge. And we're going to be looking at tips on how to improve our rewards and protect against risks through the use of story thinking and systems thinking in the planning phase, in the prep phase, in the execution phase, and in the assessment phase. And we're going to be looking at that through the lens of you as an individual, you as a good accountability partner, you as a member of a trading team that's working together, and then you as a member of a larger group or tribe that is uh, organized around the principles that we use. So 4 different roles that you can play as a social creature, 4 phases of trading, planning, prepare, execute, and assess. And then that works out when you do the math to 64 different actionable tips that will help you seize rewards, protect against risks. And it's actually very well aligned with that job book that's in book number 3. But this turns out to be an easy way to start doing small chunks to start building out your skills that are documented in book 3, which is this one over here, the hybrid trading job book. So that's a quick look at a couple books that'll be published here in the next couple months to start adding to our collection. Right. So that's everything I want to cover tonight. We've got the nightly strategy podcast coming up in a half an hour, which you are all invited to attend, and looking forward to continuing our work together. Take good care, and we'll see you on the high ground.